We're going to be looking at the NASDAQ 100 chart as we started to absolutely free fall after the market closed today. President Donald Trump released, the numbers for tariffs across the board. Market got extremely shaky, down at one point in time, 450, 500 points in a matter of 3 to 4 minutes. Not what the market wanted to see. Not what you wanted to see, especially if you're a long-term holder. One thing that I want to point out here, we're looking at the futures for the NASDAQ 100. We're looking at the weekly chart. We have broken a significant area of support. This area of support that we've broken dates all the way back to the beginning, to the beginning of 2023. So for the better half of 2 years, going all the way back here to where we had this double bottom, we kind of reclaimed this support zone here. On January the 9th of 2023, we have been on a 2-year upwards trajectory. Okay, so with that being said, we haven't had any significant type of bear market or even deep correction that has lasted longer than 1 or 2 weeks for 2 years. So what are my initial thoughts? For the short term, it's gonna be a little bit painful for people who hold and trade long. It's going to be a little bit painful even for some day traders who are not going to be comfortable with the volatility. Anytime you're in a correction / heading towards a bear market, volatility starts to really expand. The ranges get bigger, price action gets faster. Okay, staircase up, elevator down. So although it's going to be nice when you're on the right side of the move and you're able to make some money, it's going to be a little bit difficult those times where you have a tight stop loss and you're just getting stopped out because of the volatility. Now, if I kind of zoom in a little bit here, now that we've covered the basics, if I zoom in a little bit and I really look at this chart, well, this chart was looking not so good going back to Friday. If we look at last week's chart, last week's candlestick, we had a inverse hammer candle that closed below this area of support here. The area of support that I was looking at was around here at 19,500. We had those most recent lows sitting down at 19,130. We quickly reclaimed that. We quickly fell back down. Now this morning we opened up, we had a bit of a trending day. A lot of people got excited. Hey, maybe the bottom is in. Maybe we're going to continue to go up. Maybe the market has completely priced in this whole tariff deal, and that's just wasn't the case. It wasn't the case at all by a long shot. So what I'm looking at now, we've got 2 back-to-back. If it was to stand as is, we've got 2 back-to-back inverse hammer candles, and we're in the middle of a range. And the reason I don't like being in the middle of a range is because this range that we're in is in the middle of no man's land. You have now clear resistance at 19,600 and very, very definitive resistance at 20,150. The longer we spend below those 2 price point levels, the worse that this can get and the longer it can take to a recovery. Now, we could get into something where we have a big weekly capitulation candle where everyone kind of throws in the white towel and we have almost that, COVID V-shape recovery style bear market where we quickly dip 20-30% and then we start to just automatically recover. The next kind of bear market that you can kind of compare to would be 2022, where that lasted the better half of a year, and that was a lot more slow. It was a lot more methodical. We kind of just grinded lower and lower and lower and lower and lower for the better half of a year, versus the pandemic type of flash crash bear market was very, very quick. 2 to 3 months, instant recovery, all-time highs, and we just continue to soar through all-time highs. So very, very different type of environments. Right now where we stand, I haven't really seen the big capitulation candle where I can see a strong and definitive V-shaped recovery. But for the short term, where this looks like we're heading, I think we're going to continue down this week. I think at some point in time this week and early next week, we're touching prices of 18,400, 18,100. Okay, that's going to be our next kind of pit stop, right? I can see a little bit of a consolidation in that range, maybe even a dead cat bounce all the way back up to 19,000. Remember, guys, the NASDAQ 100 can move 300-400 points in a day. So to get down to this area can only take 1 to 2 days. To get right back up into this zone can take 1 to 2 days. They can definitely take longer, but just to kind of give you an example, right? Now, here's the next area that I really want to focus on. If the bulls really start to give up and we start to lose 18,100, okay, if we lose this area here and we really start to consolidate where it tries to get back over 18,300 and kind of fails, and we close a weekly candle below 18,100, that's not going to be good. You could potentially be looking at another quarter of a downturn. Now, you might get those dead cat bounces in between, but you could be potentially looking at a quarter that drops below 18,000 down into 16,000, if not 15,000 and a half. That seems dramatic. It seems like it might not happen. But if you kind of look at the narrative and you kind of zoom out on, what exactly has happened, this down here between, let's call it 15,500 and 16,000, that's a 200-day moving average on a weekly time frame. We have not tested that type of support going all the way back to the end of 2023, okay? To the end of 2023. So it's been about a year and a half, almost 2 years, to where we've kind of come back down and tested that rising support. Now, typically for a longer term investor, those are your prime buying opportunities. So imagine if in the middle to end of 2023, you were buying prices on different equities around the 200 weekly SMA, okay? Your investments doubled, okay? They doubled. And again, I'm just talking about the NASDAQ 100 as a whole doubled. You've seen some names triple, quadruple, 10x from 2 years ago. So realistically speaking, from an investor standpoint, getting down into this area is going to provide the most opportunity where you're going to make the most amount of money over the next 3 to 4 years. Okay. Now, if we come down into this little intermediate area here around 18,000, this is just going to be nothing more than a correction period, and we can still be on this upwards kind of trend. Okay. So the last stop that I need to see get tested is at least 18,400, at least 18,100. Something in between that range I need to see hold, and I need to see something like this where we tag it and then you have a very strong following week that is an engulfing candle. Okay? A very strong end of a week where you come down and tag it, and have a extremely strong bullish hammer candle followed by a following engulfing candle. Like this move, 2 weeks, right? If we get down into this area within 2 weeks, we will see if this is going to be the low. If not, let's say we do get into this area and we bounce, but we fail to put up a green large candle, and we fail to engulf a previous week's price action, or we fail to hold, then I am 100%, again, my opinion, I am not a financial advisor, but I am 100% almost certain that we get down into prices sub 18,000, sub 17,000. It's very possible and very realistic. And if I kind of go back in time to the left, you're going to see here that in July to October of 2024, okay, or excuse me, of 2023, we had an area of resistance here. Okay, so this area of resistance kind of fell down, found some support, and then finally broke through. So if we continue down this path, you're going to see that this weekly 200 SMA is matching up with that previous high point that acted as resistance and really kind of stemmed this magnificent bull run that we've been on for the better half of a year and a half to 2 years. So short term, we're completely bearish right now. Any pop is getting faded. You're almost better off just letting the long positions go and just waiting for that downwards momentum to catch those shorts. My next price target here, 18,400, keeping it clean and simple here. Any dead cat bounce, does nothing for me until I can have a weekly candle close back over 19,650 at a bare minimum. Bare minimum. So with that being said, hope you guys enjoyed this video. If you want to join Evolution Traders, trade with myself and the team and the community, learn how to trade futures, learn how to trade these prop firms, learn how to make some extra cash so you can potentially add into some longer term portfolios at some better prices, definitely join. That link is down in the description box below. If you guys are futures traders and you're looking to trade with a prop firm, you guys can use code DAnthony at Apex as well as daytraders.com. Both of those two prop firms are really, really good. They offer really, really good pricing with the code DAnthony. And I'll see all of you guys on the next one.